The Fibonacci retracement tool, the Fibonacci, obviously, like when I show my charts in a few minutes, it's simply a tool that helps you figure out retracements from reversals. We know if a trend is going up and it comes back down, that's a reversal. A retracement is the market will never go straight up or straight down. It'll come up, come down a little bit, up, down a little bit, up, down a little bit. Or if it's going down a lot, up a little bit, down a lot, up a little bit. Those little bit of ups or a little bit of downs, depending on if it's uptrend or downtrend, is called a retracement. And the Fibonacci retracement tools helps us figure out retracements from reversals, where we can get another entry and buy again or sell again and have an actual take profit. Because without the Fibonacci tool, our take profit is usually the next key level, the next support, the next resistance, the next daily area. But the Fibonacci has its own extension, which is where the extension comes into play. Its own extension where it tells you a number based on the ratios. When I get into what Fibonacci really is, it tells you where to place your take profit, and more times than not, price will get to that area, overall. We'll get to my chart in the next 30 seconds, but I gotta give you a breakdown of what Fibonacci really is. Because it's boring. You don't really need to know it. It's already factored in the charts, but just for you to know in your own brain and own mind, Fibonacci was created by a guy named Leonardo Fibonacci, and he realized when you add up a series of numbers, basically a ratio, it turned into a sequence. So 0 plus 1 is 1, 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, 3 plus 5 is 8, and so on and so forth. You add the first two numbers and get another number. What he did is he divided those numbers, like the 5 and the 8, and when you divide the numbers that's next to each other, you get 61.8 every single time. When you space one out and do like 5 and 8 is 13, so 5 and 13, skip the 8, you get 38.2. Mind you, none of this stuff matters. It has it all factored into the chart. This is the boring stuff, but just for you to have in your mind to know what Fibonacci is, where it comes from. He used it to describe proportionate things in the universe, so in his own life. But us as traders have taken that and implemented it with the charts and with this actual tool, because it helps us figure out, okay, ratio wise, how far is price going to drop back down before shooting up, or go back up a little bit before crashing down. So enough all the boring stuff. Let me just place on the chart, because it's really easy. It sounds difficult and it sounds like it's a lot. It's really not. It's the easiest thing in the world. So let me go on my charts really quick. All right, so we have our charts here, boom. So we have, like I said, I'm gonna keep my resistance and my support levels here like I actually do when I actually trade. So if I click play here, I'm in a bar replay mode so I can give you guys examples. What you should know is Fibonacci is not to be traded by itself. It's meant to be choreographed in confluence with support and resistance, the trend lines, the major market patterns, all that. You can't have it by itself because you're gonna miss an important element, basically a resistance, a support. Right here, we have it right near resistance. So if I can click play, see price clear as day, dropping down. Cool, can zoom in a little bit. This is a Fibonacci retracement tool. It helps us figure out retracements. This is why you need your key levels, your support and resistance on, because if we didn't have this resistance on, you would have thought this would have been a retracement from, an uptrend. But I know, like I said, I've been a trader for 5 years now, so I know when price gets to a certain level and it reverses, that's an actual reversal. It's not a retracement. It's not, price is not gonna retrace off of a key level, you know what I'm saying? So this is a reversal. So I'm looking for a downtrend, Fibonacci retracement tool. So I'm looking for price to go up a little bit and then drop down to hell. So if I click play, you can watch it clear as day. Still going down, still going down. Boom, finally going up. Okay, cool. This is a significant move that allows us to place the Fibonacci tool. So what it is, like I said, in a downtrend, price goes all the way down and then it comes up a little bit. When price starts coming up a little bit, that is when you draw your Fibonacci retracement tool on. So we grab it from here, Fibonacci retracement, and we click it from the top all the way to the bottom. So for a downtrend, you click it and you drag it from the top, the swing high, to the bottom, the swing low. So 100 should always be at the top and 0 should always be at the bottom in a downtrend. In an uptrend, it's the opposite. And I'll give you an example of that too. So we have our levels here, 38.2, 50, 61.8, and 78.6. Price should reverse off of one of these levels. I'm not a trader who just tells you price will reverse off of 38.2 or 50 or 61.8, because chances are, like, if you think that, you may just blindly sell or buy when it gets to the 38.2 and then price goes up a little bit to the 61.8 and then it goes down and then it goes up and you just lost money because you weren't patient enough. So I like to watch it. When I get a significant move and a significant overbearing of a candle, I'll scale down to the 15-minute time frame with a 5-minute time frame and enter.